Hello everyone. I have a question from Undisputed. Hi Imran, hope you are doing well, brother. I just wanted to get your view regarding a range I have marked up since the last week on US dollar CAD. It's a H4 bullish range. The range cycle was completed and price swept the external range liquidity. However, in my view, this is not the completion of the range or true breakup structure. I would rather see the price to close above the external range liquidity. How would you approach the price in this scenario? This is very good question, so that's why I thought to create a video on this. Look, we have the H4 chart here, and let me turn on the drawings. So this is what we have on the H4 time frame, and this is the area where we have the fake breakup structure and how we can play this area. But before we play this one, we have to understand that where are we coming from? We are coming from the bullish structure, right? And then in this area, how we will play? First, we have to check this area that we have the range from here to here after confirmation the QM. And once we confirm the range, then what we are looking for? We are looking for the price to take the internal range liquidity here and here, and then we are looking for to go one time frame higher, and then we want to find some POI so we can buy. And this POI is at the extreme range because where is the range? Here and here. So this is the extreme POI. So I just mark this as a extreme order block, and then we go to the H4 time frame, and this is where I will go long until here for the external range liquidity. And it depends on you that how you play the direct entry or the confirmation entry, but we have the confirmation entry here also, but this is not the topic this moment. And once we took the external range liquidity, we have the fake breakup structure. That's why I use the X here, because this is just the liquidity. This is not the BOS. If we have a BOS candle closure above, and this is not the candle closure above, this one is not the candle closure above, so this is just the liquidity like here also, but the next one is BOS on this candle, this candle, right? Okay, so the first thing what you have to do, if we have the fake breakup structure, you need to check the nearest QM. This is the point number one. You have to check the nearest QM on the same time frame. And here we'll have the two possibilities. Possibility number one is the QM is very close somewhere, maybe here. And possibility two is it's too far, like in this case. If it is too close, then it will be even more easier to play, but we can play both scenarios. So imagine that if the QM is here and we are targeting what, first you understand that we are targeting the QM when we have the fake breakup structure. So how far it is, how we know? First you need to check the time frame. If this is just 15-minute time frame or 5-minute time frame is okay, but if you are playing 4-hour or daily time frame, something like this, so imagine that how much time it need to take to go to the QM. It is like I just move a little bit extra time. If we come here to take the QM, it is a minimum 8 days. So the question is, can we sit just sideline to wait for the price to come all the way here on the QM, and then we target again what? The breakup structure. And we don't know next time will also be the fake breakup structure or not. but at least this is the external range liquidity we can target, right? But can we wait 8 days? No, we cannot wait. Then, like I said, we have the two scenarios. So first scenario is the QM is closure, is very close to the price, and the second, we are sitting on the second. So what we will do, we will just go one time frame lower to check the QM. In this case, we go to the 1 hour time frame, and on the 1 hour time frame, this is the H1 time frame drawings, right? On the H1 time frame, we have the QM here. Now that's again the same question. Can we wait for the price to come here? If this is close, is good. But if it is for how much time it will take, 1 day, 2 days or something, it took like 1 day, 1.5 days, something like this. So if you can wait, also okay. For me, since we are the scalper or day trader, I will not just wait the whole day for the QM. So this could be my the first target rather than H4 QM. Before H4, we have to go through from the H1 QM, right? So I will move to the 15-minute time frame. So these are the 15-minute time frame drawings. On the 15-minute time frame, where is the QMs? Because we have the this area on H4, this area. And now we are going to play here. We have the QM here to confirm the range. And once our range is confirmed, what we have? We are bearish. Why? The thing is that this is the most important point here. Not because of the QM, just on the 15-minute time frame we turned bearish, but we have H4 major time frame fake breakout, right? Or fake break of structure. So because of the H4 fake break of structure, we are turning bearish. Not only because of the 15-minute time frame, we just see the QM and we say, okay, let's go to bearish. No, this is not going to happen. Because just imagine that if on the 15-minute time frame something happens like this is a bullish structure and momentum is bullish, and we get the QM and you have the range from here to here, and you are turning the bearish here, but price takes the liquidity and then make another breakup structure, and then you have another QM. Now you have the range from here to here, and market just take the liquidity and then make another breakup structure. So imagine that every time you will be on the wrong side of the market, because number one, what we have the bullish structure, number two, what we have the bullish order flow. So how we can just because of the QM and we say, okay, we are going to turn bearish? It's not just on the same time frame we have the QM doesn't mean, or we have the range doesn't mean that we are going to change the direction. So we have the confluence in this example that we on H4 time frame, because of the fake break of structure, we are going to turn bearish. And for this, we are waiting for H1 time frame to get the QM. And if H1 time frame QM is too far, then we can go one time frame further lower on the 15-minute time frame, M15. And M15 QM is here, so we have turned bearish here. Okay. And once we turned bearish, what we have? We have this is the range from A to B. So from everywhere, wherever you find the bearish setup on the range, you will be bearish until where? Until H1 inducement or H1 I will not call the inducement here to make you guys confused. Later we will talk about the inducement topic. I will say H1QM. Okay, so we are bearish from the 15-minute time frame to where? To H1QM, and we will check every bearish range, whatever the bearish range we find. From here to here you find from here to here you find, oh, from here to here you find. It doesn't matter. It all depends on the ranges how you play, because this is not the topic. I'm not going to explain the ranges here, but in some other video. So what we got the change of character, and this change of character is what? One second. This one, we got what? The change of character, and this change of character is what? This is H1QM and M15 change of character. Okay, and now we are bearish, completely bearish. Why? Because not only from the 15-minute QM but also from the H1QM. Now we are bearish because of, from where? From the higher time frame. Like in my last video I explained, we always need to ask two questions. Where are we coming from? Question number one. And where are we going to? Question number two. And where are we coming from? From the H4 fake breakup structure. And where we are going to? We are going to H4QM. So everything in the middle, we are just bearish. In this case, look here. Now the inducement topic is also going to cover in this area. Look here, we have the range now from here to here. Why? Because we have the QM. We don't have any QM here. Why? Because look, this is the pullback, this one. Until price will not take this high, even it take every high, it's all internal structure. Until price will not take the left side of the leg, the recent structure, we will not call this as a QM. If this happens, yes, now we have the liquidity is taken out, breakup structure. This breakup structure is different, not because of this one, not the major breakup structure. This is just for the QM. Like this, we say, okay, this is a QM, this is the breakup structure. But this breakup structure just to confirm the QM, not the major structural point. Like this is the major structure point, this is the major structure point. You understand? So we want here the breakup structure in order to confirm what? The QM. If we don't have, then we have to wait the price to break this level. And then what is the recent high here? This high is taken out, and then what we have? The QM. Now we have the range from A to B. And if you are waiting for the price to come all the way here to take the liquidity and then go lower, this is not going to happen. You have to understand the momentum of the market, and you have to understand the possibilities in the market. I will not expect, if market will come here, then why not just make the breakup structure and then just continue go higher? Market has already changed the direction now. So what I will do here, this area, now we have what? We have the range, and above this range, what I'm looking for? I'm looking for something here, this one. And this is what? It is called the decisional order block. Once we have the decisional order block, this is the first area where I'm looking for another shot until where? The breakup structure. And here also have the confirmation entry. And then what we have? We have another breakup structure. And where is our QM? Look here. This is the structural point is taken out. So, and then we have what? The breakup structure. And now we have what? We have the range from here, A to B. And where is the QM? look here, this is the last structural point. Liquidity is taken out, break of structure, and now we have the range from A to B here. And if we have the range from A to B here, our QM is confirmed. Like I said above QM, what I'm looking for, another decisional order block here. And this will be another decisional order block. Price tap the external decisional order block. What I'm expecting, I'm looking for the another break of structure. I'm not expecting the price to go all the way higher. It doesn't make sense to me. It will go there for what? It's going to take the H4QM, and then once we have the break of structure, where is the most recent swing point? This one, right? So we have the QM here. So now we have a range from A to B, and this is going to be very interesting for you guys. Let's first mark something. Okay, this is the QM, and then we mark this one as a decisional order block, and we don't get any confirmation entry if we from the decisional order block. If this is taken out, then the next area what we target is the extreme order block. So this is the extreme order block, this one. And if extreme order block is also taken out, then we go one time frame higher, H1 time frame. And in this case, what we have, I don't see anything unmitigated except this one. This is unmitigated weak. So this is what I call the let me change the drawing here, this one. So this is what I call the external order block bearish, and this is where the inducement is. Look here, first you understand one thing, because we are bearish on the 15-minute and 1 hour time frame, and we are going on the H4QM. So any range something like this coming down, and if we break this high, it's the inducement. It is not going to change the structure, and we are not going to bullish, and we will continue be bearish until we get to our target. And something like this happened, and then we take the high again, and this will be the inducement like this. And above this inducement, this area will be the order pairing, this area. This is the order pairing. Once we got the order pairing, what we are looking for, we are looking for the another break of structure. Another break of structure means what? If we took the inducement on one side, we are looking for the market to go on the other side. And same here, if we took the inducement from the one side, we are targeting the other side of the market. And then let's go to the chart again. And one more thing you understand about the inducements, let me write here. Where maybe 20, something like this. Okay, this is a 1 minute change of character is 5 minute inducement. 3 minute change of character is 15-minute inducement, and 5 minute change of character is 30-minute inducement. 15-minute change of character is what? H1 inducement. And H1 change of character is H4 inducement, and H4 change of character is daily inducement, and so far so forth, like this. And on the daily it will be the weekly. So we are here on the M15 and H1. M15 time frame, we have the range. Look, this is the most important point. Please, little bit focus here. This is the H4. Sorry, we are on the H1 time frame. This is the H1 structure, and this is the M15, something like this. And then we have what? This is the change of character, and this is what we are looking for, another breakup structure, something like this. Now what the point is here to notice, this is what I call, this is on the M15 time frame. M15 time frame, this is the change of character. But like I said, M15 change of character is H1 inducement. So this is the order pairing, and once we are back into the range here, we are bearish again. Once we are bearish, what we are targeting? We are targeting another breakup structure. So look here, this is the H1. We are coming something like this, something like this, and like this, right? So what is the most recent structure point on H1? This one. But on the 15-minute, this move is going something like this. And on the 15-minute, what we got? The change of character. Why? Because we have the range from here to here. And on the H1 time frame, this is something like this. This is a single leg. But on the 15-minute, it is something like this, a full structure. And for them, here is the most interesting point. Look here, for people who are sitting on the 15-minute time frame, this change of character, this one, is the price closed above. So for them, this is what? The valid breakup structure or the valid change of character. And here also price closed above. Even on the H1 time frame, price closed above, like 2 bars closed above. For them, this is valid breakup structure or valid change of character. So what they are looking for? If you are sitting on this area, what you are looking for? A valid breakup structure means you have the bullish range now and you want to buy something from here, or something from anywhere. If you are sitting on the buy side, this is all SMT, and SMT means smart money trap. Everything will get destroyed if you will try to buy this one. This is the H1 inducement. You have to understand, not only you just see the structure has shifted and you think, oh, we have another change now. From the bearish one, we have the change of character, and we want to buy something from here. If you will try to buy something from here, you are SMT. You understand? This is the most important point where most of the traders, they always face the problem. They don't understand what is the inducement and what is the real change of character. So we don't have any change of character on M15. We have the change of character, but H1, it is just the inducement. Please, this point you keep in mind. And then what we were looking for? We were looking for another breakup structure, and everything was here, just the SMT. Okay. So we are on the 15-minute time frame, and where is our order pairing? From here to here. This is what our order pairing. and once we are back into the range, we turn into bearish. Now we have the range on the smaller time frame. Maybe uh, from the 15-minute we go one time frame lower, that is 3 minutes for me, but some people they go on the 1 minute. It all depends on them. I use the multiplier between 4 to 6, and some people they use even 12 to 16, and I respect how they use, and it must be working for them surely, but I use 4 to 6. So if you have 3 and 15, and this is multiplier 5, so I it should be between 4 to 6, right? So I go to the 3 minute time frame, and this range from there to here, and here we'll have some entry, and you can put the stop loss there or whatever. I'm not talking about the entries. We This is all about bias and bias video. And once we have the order pairing, we are back into the range, we turned bearish. And once we are on the one side of the market, we are looking for the other side of the market, and this is here. Every range is bearish. Every range is bearish. Then you have the range from there to here, here to here. Then this is the range. Then you have the range whatever on the lower, further lower time frame. You have the range from there, whatever you do, but ultimately your target is here. So you understand that how this everything is coming from the H4 time frame, and I have explained everything, how you can play the ranges until your target on the H4 time frame, and how you can play the inducements. I hope it helps. Thank you.